What is a reverse mortgage? That is a great question that I've been asked several times here in the last few weeks as reverse mortgages have become a lot more popular. About 6 years ago, there was 5,000 reverse mortgages done. Last year, there was over 100,000 reverse mortgages done. So a lot of people are interested in what the reverse mortgage is. So to answer that question, a reverse mortgage allows seniors to borrow money against the equity in their house. Instead of making payments to the mortgage company, you have the option of receiving those payments. In most cases, that income that you receive is tax deductible. Now, of course, you're going to want to consult your tax advisor, but depending on what type of payments you get, they should be tax deductible. It is especially for borrowers 62 and above. And if there are two people on the actual loan itself, both have to be above 62. You cannot average the age. Why would a senior want to get a reverse mortgage? There's a lot of reasons for that. The most substantial one is they want to eliminate their current mortgage and payment. A lot of seniors are in their retirement age and they have a $500, $600, $700 monthly mortgage payment, and they're getting $1,600 in Social Security or retirement income, and that current mortgage payment is eating up too much of that retirement income, and so they need to eliminate that mortgage payment. They want to supplement their retirement income. Perhaps you've worked your entire life and spent a lot of money paying off a very nice house. Because you did that, you didn't put as much money away into your retirement plan, and you may need extra funds to supplement your retirement income. If you want to remodel and or repair your home and you can't qualify for a mortgage right now because you don't have enough income, then a reverse mortgage would be perfect for you because you could pull that cash out and there are no income qualifications because you actually receive the money. You don't pay it back. Pay property taxes is another reason that you may want to do a reverse mortgage. If you have significant property taxes for the next few years and you don't have the amount of money to be able to pay them, that may be a very good reason. Extreme healthcare costs like long-term care. Perhaps you need a nurse that comes out and visits you in the house on a daily basis or a weekly basis. That can become quite expensive. And Medicaid, Medicare, that type of stuff doesn't cover for all that, so you may need to use some of that cash to pay for extreme healthcare costs. And long-term needs also go right along with that. If you have any long-term needs while you want to live in your house, you need to get that extra income to pay that off. Perhaps you could no longer afford that mortgage payment like I was talking about in the earlier segment, and you have went into foreclosure. And now the lender wants 5 months worth of payments to get you out of foreclosure. You don't have that kind of money sitting around. You could just refinance that mortgage, pay it off, and then no longer have a mortgage payment. So you'd save that $500, $600, $700 a month payment, and you wouldn't have to worry about going into foreclosure again. What are the eligibility requirements of a reverse mortgage? Fairly simple. The first is that all borrowers must be 62 and above. Your house must be free and clear or be able to pay off the current mortgage with your equity. That means that, and this is just a rough figure, let's say your house is worth $100,000 and you have a $40,000 mortgage. Well, you should have enough equity available to pay that mortgage off plus get a little bit of cash. When I look at, preliminarily speaking, a person's eligibility for a reverse mortgage, I like to have only about 50% of the equity used up. Now you can qualify for more, but as a rough figure, that's a good one to start with. The reverse mortgage must be in a first mortgage position. That is, you can't try to take it out as a second mortgage or have any other liens against the house that would precede the reverse mortgage. The type of property that can be done is a single family 1 to 4 unit and owner occupied, townhomes, detached homes, condominium units, PUDs, and some manufactured homes are also eligible. The main thing is that they must be able to meet the Department of Housing and Urban Development's minimum property standards, HUD. I'm sure you've heard of FHA, FHA appraisal. You must meet those FHA standards also. When do I repay my reverse mortgage? If I am getting cash and I'm not making any payments, simple question is, when do I actually repay that mortgage? As with most reverse mortgages, you must repay a reverse mortgage loan in full when the last surviving borrower dies or sells the house. You also may be required to pay if you let the property deteriorate, except for reasonable wear and tear, and you fail to correct the problem. All borrowers permanently move to a new principal residence. The last surviving borrower fails to live in the home for 12 months in a row because of a physical or mental illness. Now, this stuff is not written into stone. There are some caveats with this, and if you know that you will be able to get back into your house, but let's say that you need to be in the hospital for possibly 14, 15, 16 months, as long as you talk with your lender and you let them know what your scenario is, then you should be fine. They'll be able to work something out with you. And then, of course, if you fail to pay your property taxes or hazard insurance or violate any other borrower obligation with the house, such as those, condo would be a condo unit fee, things like that, then you can actually be forced to repay that mortgage. So those are the basics of what is a reverse mortgage. I hope that you found this information of benefit. If you need anything else answered, please go to my website, which is http://wisconsinreversemortgages.net. That's wisconsinreversemortgages.net.